The European Central Bank is just moments away from announcing further measures to stimulate the Eurozone economy. Top of the expected list of measures is a further cut in negative interest rates and a boost to the region's huge bond buying or quantitative easing programme. Well, with me now in the studio, Salman Ahmed, Chief Global Strategist at Lombard Odier Investment Manager. Good to see you. We're expecting those numbers in just a moment. Mario Draghi's talked up these negative interest rates so much. It's going to happen, isn't it?
Yes, I think there has been a lot of communication built up into this meeting. In fact, if he doesn't move, there is a serious risk to the credibility of the central bank itself. So at least 10 basis points of cut he will have to deliver. In addition to other range of measures, as you mentioned, he will have to put on the table to both pacify the market and also create expectations that the central bank still has tools to stimulate the economy.
And yet the whole concept of negative interest rates is hugely divisive. The front cover of the FT this morning, leading bankers from all across Europe calling it a dangerous experiment. What are his options to try to limit the potential dangers of a further cut to the banks?
Sure. So on that front, it's the devil is going to be in the detail, and it's possible, and in fact very likely, that he will discuss that in the press conference, which is that what we call the tiered system, whereby at least initially Mr. Draghi, even if he cuts the rate even further, can protect the banking sector at least initially from the full force of that policy.
And as you say, there's a whole other list of weapons in his arsenal. Are you sure that we're going to see a further expansion in both amount and scope of quantitative easing?
Yes, so on the QE front, we're expecting at least a 10 billion increase per month to the pace, so from 60 to 70, increase in the duration of the program as well. But at the same time, some more additional technical details into what they are going to buy and how much they can buy. So just to give them some more space of both to put this policy in place and also give them options that if they need it, they can do more.
Yeah, he really did set himself a tall order, didn't he, back in July 2012 when Mario Draghi promised to do whatever it takes to save the Eurozone. Salman, really good to get your views on this. Salman Ahmed there from Lombard Odier Investment. Let's cross live now, though, to the BBC Business newsroom and talk to our economics correspondent, Andrew Walker, who's got the latest numbers for us. Andrew, as Salman was just saying there, expectations are widely that the ECB will cut the deposit rate by 10 basis points to minus 0.4%. Have you got those numbers for us?
Yes, indeed. And the deposit facility, the rate has indeed been cut. You can see the figures here to minus 0.4%, exactly as expected. The ECB's other two rates, the balance of expectation was actually that they were going to be unchanged. Well, they've cut them both. So here we have this is the main, what's called the main refinancing rate at which the routine lending operations to the commercial banks are done. That goes from plus 0.05% down to zero, exactly zero. And this one here, which is called the marginal lending facility, the rate, it's a kind of an emergency funding rate for banks borrowing from the ECB. That has also been cut from 0.3% down to 0.25. So actually a little bit more action on the interest rate front than perhaps many people were expecting. The big one, though, that one about the deposit rate, exactly in line with expectations. And we await Mario Draghi's press conference to see what he has to say about quantitative easing, whether he's going to expand that programme.
Yeah, indeed, that coming in about 45 minutes from now. As I was just discussing with Salman here in the studio, Andrew, negative interest rates hugely divisive, particularly after Japan introduced them. A lot's been written about how it's hurting banks. He talked about the bank deposit rate there, at the central bank, that is. But some of these leading lenders across Europe really talking about how it's hurting their profits. It means they're forced into taking riskier loans. What's the ECB, do you think, going to do to try to mitigate this impact on the banks?
Well, I need to see a good deal more detail than we've got on this screen, but one suggestion that has been made is the possibility of doing some kind of tiered system by which the deposit facility, this particular rate would apply only to certain parts of the money that they're holding overnight. But I say we need to see a lot more detail before we can say whether that's the case. But certainly the banks have been expressing some real concerns about the impact that these negative rates might have on their profitability.
Yeah, as you say, we'll get a lot more detail from Mario Draghi himself in about 40 minutes. Andrew, really good to talk to you there. For anyone who wants a little bit more information on negative interest rate, Andrew's actually written a really useful article on them on the BBC Business website entitled A Financial Wonderland. Salman, I just want to get your reaction to those numbers from Andrew.
So I think I agree with Andrew that incrementally he has already done a little bit more than what the market expectations was. Although the deposit rate cut was 10 basis point, but the other rates which he has moved is also a powerful signal that they are willing to move all across the chain, the interest rates further down in order to obviously stimulate the economy and hit the inflation targets.
But amidst all of this, you say that the expectations are for an increase in quantitative easing. But after years of ultra-loose monetary policy, the Eurozone economy is still in the doldrums.
Look, so if you ask the same question to a central banker, he will tell you this, or at least the doves will say that things would have been much worse if we hadn't done this. So there's a counterfactual type of argument that it is right if we compare the situation to pre-crisis, the effect has been much lower than expected. But at the same time, please consider that if fiscal policy is not on the table, the pressure is on monetary policy to do whatever it takes to support growth.
Yeah, indeed. OK, Salman, many thanks for sticking with me. We're just going to head back to the newsroom now because Andrew's got some more figures for us, this time on QE.
Yes, indeed. So here we have the plans for the expansion of the quantitative easing programme to 80 billion euros a month. That's to say the ECB will be buying 80 billion euros a month worth of assets in the financial markets, primarily government debt. We wait to see, though, whether they might be buying other kinds of assets. That's an increase of 20 billion. The figure was 60 before. That's rather more than the main expectation. People were thinking that maybe there'd be an extra 10 billion a month. Well, it's turned out to be double that.
OK, Andrew, good to check in with you. Andrew Walker there for us in the newsroom. Salman, very quickly, we were expecting this increase.
This is quite big because the expectations were around 10 billion. And increasing it by double the amount, I think Mr. Draghi is putting more cards on the table. So, which I think the markets will now see it as that the central bank is willing to do more than they were even expecting.
Is this the big bazooka everyone was hoping for?
I wouldn't call it like the big bazooka, but it is certainly a moderate bazooka.
OK, Salman Ahmed, good to talk to you about bazookas and everything else.
Thank you.
That's all from us and from the ECB. But yeah, as ECB was saying, we're waiting for that presser from